Welcome back to Investing Talk podcast. We're going to be taking a look at Lotus Technology today.
Lotus Technology.
Yeah, and we've got a pretty good set of info here. I think our goal is to really try to figure out, okay, where do they stand like right now, and where could they be going in this whole EV market?
Yeah, absolutely.
Yeah.
I mean, I think, what we've got here covers everything from sort of the company overview, how they're doing in the stock market, their financials, potential red flags, potential upsides,
Yeah.
what's the market sentiment around them, who are they competing with? And then, what does the future hold for them? We've got some recent developments, how they're impacting the market,
Hmm.
even the industry context, and then, even some risks and opportunities, social sentiment, and then, some recent movements in their stock price, and then even like a full-on due diligence report from 2025.
Okay, so we've got a lot to unpack here.
We do.
Let's dig in. So Lotus Technology, they're based in Shanghai, part of Geely Holding. Geely Holding, they took like a majority stake in Lotus UK back in 2017.
Hmm.
And it looks like they're really pushing now like luxury battery, electric lifestyle vehicles,
Right.
but they're still doing the luxury sports cars too. So it's like a real shift, I think.
It's a big shift, I think, that Geely getting involved is a big signal that they're really serious about electrifying the Lotus brand.
Yeah.
Making it a premium player in the EV market.
And if you look at the stock, man,
Yeah.
it's been all over the place, like even just the past month. I mean, we saw it bouncing between like 180 and 204.
Right.
I think this information's maybe a little old, though.
Right.
But you look at the last 6 months, the
Yeah.
past year, I mean, it's been as low as like 142 and then as high as 1385. I mean, that's a huge range.
It is. Yeah, it is a huge range.
So that suggests to me like a lot of uncertainty. I mean, what do you think's driving these big swings?
Yeah. I mean, I think it's probably a few factors, right? It's like, the whole EV market is known to be a little bit volatile. I mean, just things like, technological advances, regulations changing,
Oh, yeah.
how people feel about, EVs, all of that.
Yeah.
And then, with Lotus Technology, they're still, they're trying to really make their place in this market. So yeah, they're going to be more sensitive to how people are feeling about EVs, especially, the luxury ones.
Mm-hmm.
And then, any news they put out, any announcements like, how many cars they're making deals or doing financial results, that's all going to make the stock jump around.
Okay, so let's dive into the financials a bit.
Yeah.
For 2023, they had revenue of like 679.01.
Yeah.
Which means, they're growing. But they also posted a net loss of negative 757.1 and it looks like their loss for the last 12 months is even bigger, like negative 901.28. And EPS is like negative 151. So they're growing, but they're also losing a lot of money.
Yeah. I mean, it definitely shows that they're making more sales,
Mhm.
which is good. But yeah, they're spending way more than they're making.
Right.
Which that's pretty common for EV companies, especially when they're still trying to grow.
Mm-hmm. Yeah.
They're putting a ton of money into research and development, setting up factories and marketing to get their name out there.
Yeah.
But the fact that trailing 12-month loss is even bigger,
Yeah.
kind of shows that, they're still, working on getting profitable.
Yeah.
Like that's a big challenge for them right now.
It feels like they've got some really strong points, but also some weaknesses. They have the Lotus brand, which is like iconic, It's known for performance.
Absolutely.
And this whole luxury EV market is growing. But then you've got these huge losses. The stock's unstable.
Right.
They haven't turned a profit yet.
Yeah.
And then this thing with Geely, it's like it could be a good thing or a bad thing, what really stands out to you when you're looking at all this?
I think what's interesting is that you've got this like amazing brand, right? Everybody knows Lotus.
Yeah.
They're coming into this market that has so much potential, but they're running into some really serious money problems, right?
Mm-hmm.
They're trying to grow, but it's costing them a lot.
Mm.
I think the Lotus name, that gives them a big advantage, especially the people who want like a high-end EV. But they've got to turn that name into sales. And more importantly, they've got to start making money.
Yeah.
The Geely thing is interesting, right? Because it gives them money, connections, probably helps with manufacturing, but it also makes them kind of dependent on Geely.
Mm-hmm.
So we have to see what Geely's long-term plan is, right?
Yeah.
Like, are they going to be in it for the long haul? And, the fact that Lotus isn't profitable yet and the stock's all over the place, that's definitely risky, for investors.
So so how's the market viewing them right now?
Yeah.
And who are they really up against? There's been some news about them partnering with AWS.
Oh, really?
Yeah, for like connected car stuff and better insurance services. So it seems like they're thinking beyond just the cars themselves.
Right, right.
But I also noticed there's not a lot of analyst coverage on them, which probably doesn't help them get noticed.
Yeah.
And then you've got their competitors like Tesla, Ferrari, Porsche,
Yeah.
big names. I mean, the Lotus brand is strong, but they're behind financially and in terms of market share. So what kind of impact can these tech partnerships really have on how they stack up against the competition?
I think those partnerships they could be pretty smart. Because, these days with cars, especially luxury EVs,
Yeah.
the tech inside is a big deal.
Yeah.
It's how they stand out. So working with AWS, that's huge.
Yeah.
I mean, they could get some really cool features in their cars,
Mm.
which would attract, techie buyers.
Mm.
And it could even help them run their business better, save some money. But as good as those partnerships are,
Right.
I don't think they're a magic bullet,
Yeah.
They're still up against companies that are making way more cars, selling way more, making a profit. So these deals can definitely make their cars better, make them look good.
Right.
But they're going to need more than that to really compete. They need to figure out pricing, production,
Right.
and how they're going to market themselves to grab some market share. And you're right, not having a lot of analysts talking about them makes it harder to figure out what the market really thinks.
Yeah.
And it makes it harder to attract big investors.
Okay, so looking ahead, we know they're releasing their Q4 and full year 2024 financials
Right.
on April 22nd, 2025. So that feels like a big day.
That's a big one, yeah.
If they've got good news about how many cars they're delivering or if they announce any big plans, that could really boost them. But there are risks too, right? Like the whole EV market is changing a lot with regulations and competition's fierce. So what do you think we should be watching for with these results and with these risks that they're facing?
Yeah, I think that earnings report, it's going to tell us a lot.
Yeah.
Are they still growing their revenue like they did in 2023? More importantly, are they getting any closer to making a profit? That's what investors want to see.
Yeah.
They'll definitely be looking at those delivery numbers. That tells you how much demand there is for their cars.
Yeah.
And then any updates they give about their production, new cars they're working on, more partnerships, the market's going to react to all that. Now, about those risks, you're right. Governments are still figuring out how to regulate EVs.
Right.
So any changes there could shake things up. And they're in a tough spot with all this competition, especially in the luxury market. It's not enough to just get customers, they got to keep them, especially with all these other companies offering great cars. So they have to control their costs, run their business well. That's going to be key to surviving these risks and actually making money in the long run.
Okay, so back in early April 2025, we saw their stock price go up a little bit, like 2.5%. Got up to 168, closed at 164. But the volume was lower than usual.
Right.
And analysts have them at a hold rating.
Yeah.
So maybe that little jump was just because people are expecting good news in the earnings report.
Maybe.
And maybe there's some general optimism about EVs.
Yeah.
But that low volume makes me think maybe people are still a little unsure.
It does make you wonder.
What do you make of all that? The price going up a bit, the low volume, and that hold rating?
Well, it kind of makes you question how strong that price increase really was,
Yeah.
Like maybe it was just a few people making some quick trades.
Mm-hmm.
Not a sign that a lot of investors are really confident. And that hold rating from the analysts,
It means they're not saying buy, but they're not saying sell either, right?
they're sitting on the fence. Yeah.
So they're probably waiting to see how things play out.
Yeah, definitely waiting to see some more proof that things are improving.
Yeah.
I think they see the potential, but there's still a lot of question marks, especially about them making a profit and really competing. So I think for now, the market's kind of taking a wait-and-see approach, which, that makes sense when you've got a company with big dreams, but also big risks.
The EV market's definitely growing, though.
It is.
And that has to be good for luxury EV makers, right? Like Lotus.
Yeah, it should be.
They've even partnered with NIO to use their charging network in China.
Oh, wow.
Which I think is a smart move considering Tesla and NIO are building their own networks,
Right.
So how important do you think this charging infrastructure is going to be for Lotus, especially in a big market like China?
Oh, I think it's going to be huge. I mean, if you want people to buy EVs,
Yeah.
They have to be able to charge them, right? Especially in China where the market's so big.
Right.
And, with a brand like Lotus, their customers expect the best.
Mm-hmm.
So charging has to be easy and convenient. This deal with NIO is great for them because NIO already has a ton of chargers in China.
Mm-hmm.
So Lotus doesn't have to build their own network from scratch. That saves them a lot of money and time.
Yeah.
And it means they can focus on making great cars and getting their name out there. I mean, in a market where everyone's competing,
Yeah.
having a good charging network, that can be a big advantage for getting people to buy your car.
Okay. Let's get into this due diligence report
Yeah?
from 2025. It says the revenue growth has been impressive, like 213% increase in the past year. And analysts are predicting like 48% annual growth for the next 3 years,
Wow.
which is way higher than the average for the industry. They're even estimating revenue of $2 billion for 2025,
That's a big number.
which would be a 25% growth rate. So they're projected to keep growing, but does this really line up with all the stuff we talked about earlier about them losing money?
Well, I think what's interesting here is you can have a company growing really fast like that
Yeah.
and still be losing money, especially when they're a younger company, putting tons of money into expanding, marketing, getting themselves established. The fact that their revenue is growing so fast,
Yeah.
that means people want their cars,
Yeah.
which is a good sign. But right now, their costs are just higher than all that revenue they're bringing in.
Yeah.
So that's why they're still in the red.
Mm-hmm.
The fact that analysts are predicting they'll keep growing like this
Yeah.
means they think Lotus has a good product and a real chance to be successful.
Mm-hmm.
But the big question is, can they use all this growth to get more efficient,
Right.
control their spending,
Yeah.
and actually start turning a profit? So the growth looks good, but the financial challenges are real. They're going to have to figure that out if they want to last.
Yeah. The report also talks about their valuation. So their price to earnings ratio is around 25.4.
Okay.
And it says that's lower than the average for the tech sector.
Hmm.
So maybe that means they're undervalued. But then it also says their price to book ratio is super high, like 177.13,
Wow.
which could mean they're overvalued. So how do you make sense of these two numbers that seem to be saying opposite things?
Yeah, well, it gets tricky when you're trying to put a value on a company that's growing fast
Right.
but isn't making money yet. That price to earnings ratio,
Yeah.
which compares their stock price to how much they're making per share, doesn't really tell you much when they're losing money.
Right. Right.
So comparing it to the tech sector average, maybe that's based on what people think they'll earn in the future.
Mm-hmm. But it's not looking at what's happening right now.
Right. And then that price to book ratio, that's comparing their market value to what their assets are actually worth. So a really high price to book ratio usually means investors think the company's going to make a lot of money in the future,
Mm-hmm.
even if their assets aren't worth that much right now. So with Lotus, that high price to book ratio probably means people believe in the brand.
Yeah.
And they think the luxury EV market's going to explode. But it also means a lot of their value is riding on things that haven't happened yet.
Right.
And that's risky. So yeah, the traditional ways of valuing a company, they don't paint a clear picture here.
Right.
Investors really have to think carefully about the potential for growth, but also the very real financial problems they have right now.
And then the report goes on to say that their return on assets is negative 39.33%,
Yeah.
which basically means they're not making much profit from their assets
Right.
and they're not paying any dividends, which I guess makes sense for a company trying to grow.
Yeah, definitely makes sense. They're going to be reinvesting that money to grow.
And their price to sales ratio is also higher than the average for the industry, which again could mean they're overvalued. So it all seems to come back to that April 22nd earnings report being really important.
It is a big one, yeah.
Especially since the report mentions their stock's been going down lately.
Right.
So what are your final thoughts on Lotus Technology right now with all of this information?
Well, I think the big takeaway here is they've got a great story to tell, right?
Mm-hmm.
They're a well-known brand in a market, luxury EVs, that's just exploding.
Yeah.
And those revenue projections, that's impressive, right?
Yeah.
Shows they have a lot of potential.
Yeah.
But you can't ignore the fact that they're losing a lot of money and they're not profitable yet.
Yeah.
That's a serious thing for investors to think about. And the valuation metrics, they're all over the place.
Right.
Some say they might be undervalued. Others say they might be overvalued.
Right.
It's a tough call. So yeah, Lotus Technology, it's a high growth, high risk kind of investment. It all comes down to, can they take this great brand and market opportunity
Mm-hmm.
and actually turn it into a profitable business.
Right. In a really tough industry. Investors have to balance that exciting potential with the very real challenges they're facing right now.
Well, I think we've covered a lot about Lotus Technology today.
We have.
We talked about their financials, where they stand in the market, what they might do in the future. It's clear that they've got a really interesting story, but there are also some financial hurdles they have to deal with.
Absolutely.
And that's something any investor needs to think about carefully.
Yeah.
So that earnings report coming out on April 22nd,
Mm-hmm.
that's going to be key. We'll see if they're still growing, if they're making any progress on those financials.
That's going to give us some much needed clarity for sure.
Yeah.
Watching what they announce and how the market reacts.
Yeah.
That'll be super interesting. And I think this brings up a really important question for investors in general.
Mm-hmm.
When you've got a company that's not making money yet but could grow a lot, how much weight do you give to that potential growth, especially when the market's kind of jumpy like it is now?
It's a tough balance, right?
Yeah.
Weighing that exciting future with the less exciting reality of today.
It is. It's definitely something to think about. Well, thanks for joining us for this exploration. If you found this insightful, please subscribe, like, and comment. We'll be back with another exploration soon.